Hello, and on this episode, we're going to be answering viewer questions. So I posted this question in several Facebook groups with a couple of other YouTube friends and acquaintances and asked them, what burning questions do you have about money or personal finances? And I got a lot of great questions, so I'm going to answer them in this video. Pause right here if you want to see the list of questions on the screen in front of you, and feel free to skip to the chapters below if you want to fast forward to a specific question. All right, let's get into it. I'll start off with a couple of the more general questions, and then we'll get into some of the more nuanced, more complicated questions later. And for those of you who asked these questions and happen to be watching, I'm going to link your channels down below for the rest of the viewers to check out. So the first question comes from Eunice, and she has a great home decor and DIY channel, so check her out down below. And her question is, what's your favorite credit card and why? So I'm actually not that big of a credit card nerd. There's a couple channels I do watch for fun, such as Ask Sebi. So for me personally, I just have two credit cards. One is my Amazon credit card because I shop there quite often. And the benefits there, it's 5% cash back on pretty much almost every Amazon purchase. And the second card I use is the Chase Sapphire Reserve. And it does come with a pretty hefty annual fee, but has lots of benefits, which sort of pay for itself, especially in the first year of use. Before this whole COVID thing happened, I was able to use that credit card and gain enough points to pretty much pay off more than half of me and my wife's honeymoon. A couple of other utility cards we have in store are our Target credit card, which also has 5%, and our Costco credit card, which also has 5%. So between Amazon, Target, and Costco, that's pretty much where we do most of our shopping. The second question comes from Kevin, and he asks, would you rather invest more money into the stock market or pay additional principal on your monthly mortgage payments, or a combination of both? Great question. So I think this is a question that a lot of people will eventually ask themselves in their life, especially if they have a mortgage payment. And the short answer is that if you want to optimize your money, it's pretty much 99% of the time you want to put that money into the stock market. And the reason is that an average return on the stock market will be between 7 and 10%. And with the current rates you probably have in your mortgage now, which is between 2.5 and 3.5, especially on your primary residence, the gains that you'll get from the market will be much, much higher than the savings you'll get in interest from a mortgage rate. So personally, I never put any extra into my mortgage payment. And recently I refied, so my mortgage payment effectively just reset itself to 30 years. And instead I put all my extra money into the stock market. And we'll talk more about the stock market in a couple of minutes later in this video. However, some people might want to consider paying off some of their mortgage early because it's sort of a psychological peace of mind. Like imagine not having to pay rent or mortgage every single month. That must be a great feeling, right? The next question comes from Judy, who's our YouTube lawyer. She has a great channel on legal advice and breaking down what a day in the life of a lawyer looks like. So this first question from Judy, and she actually has quite a few questions, which I'll answer some of them later in this video. But the first one is, what are a few splurges you think everyone should make? And I talked about this concept in one of my very, very early videos, but this is something I learned from the book, I Will Teach You to Be Rich by Ramit Sethi. And in the book, Ramit says, spend lavishly on the things you love while you cut mercilessly on the things you don't. So what that means for every single individual will be very, very different. For me, I love food, I love video games, I love technology to make cool videos like this. So I'm not afraid to splurge on those things and feel pretty much no guilt. But on the flip side, I don't spend money on things like Starbucks, on fancy clothes, other things that don't really matter to me. Right. So for instance, like this shirt is from H&M and it's like $10, and most of my wardrobe are $10 t-shirts. And of course, when the world returns to normal, I will definitely splurge on travel. I'll answer a second Judy question right now. And that question is, what in your opinion are the biggest financial scams? And since you're watching this on YouTube and you guys are probably on Facebook, Instagram, TikTok even, yeah, anytime you see someone trying to sell you a course on how to get rich, such as like earn money through drop shipping, earn money through FBA. And you see these young, mostly young kids sitting in front of their Lamborghini, getting off a private jet, showing off like wads and wads of cash. Those guys are mostly all scams. So I would say anything out there that promise you riches beyond your wildest belief is probably a scam. So instead, for free advice, for a lot of value, subscribe to this channel instead, and I'll answer any question you have about money, about building wealth, about getting rich, for absolutely free. And according to my YouTube analytics, most of my viewers actually aren't subscribed to my channel. So do me a huge favor. So hit that subscribe button. It would mean a great deal to me. So let's get into some investing questions. And the first question comes from Mario, who has a channel about videography, photography, tips and tricks in Adobe Premiere. And his question is, what is the best way to invest with zero experience? So if you think about it, everyone starts investing with zero experience, right? And it's scary at first, but it's actually very simple once you open up the black box and understand the basics of it. So my general advice here, and I'll go into more details if you guys want in a future video, but let's say you have $1,000 to invest. The easiest way to do that, if you're employed by a corporation, is to invest through their retirement program, such as a 401k. Or if you're not employed by a corporation, you can look into a Roth IRA to put your investments. Alternatively, if you're already doing that and you want to get invested actively into the stock market, my quick advice there is 1, open up a Robinhood or Webull account. Use my referral links down below. 2, take your first $1,000 or so and put it into some basic S&P 500 ETFs or exchange traded funds. Buy 1 share and sort of watch what happens over the course of a couple weeks, a couple months if you want to see what happens longer. And then you sort of get this rhythm of how to invest and what the money's actually doing. I think a common misconception about investing is that it's gambling. And if you put your money into the stock market, it can completely go away and disappear. And in most cases, that's not true unless you're doing something crazy. And if you put your money into an S&P 500 ETF, then your money's pretty safe and you'll see it grow over the long term. And another follow-up question to that comes from Maggie Lamb, who runs the Rack of Lamb channel. And she does great recipes, mostly Asian inspired, and her food looks great. And what Maggie asked is, what are your thoughts on investing in ETFs? And for those of you who aren't familiar with the term, ETFs are exchange traded funds, and you can think about them as sort of the modern day index fund. And they're a collection of different stocks and companies all in one place, so you can easily and more conveniently invest into a diversification of different companies with one single purchase. Pretty easy. So in my active portfolio, I actually have a very large portion of my funds sitting in VOO, like I've talked about before. The reason is it's diversifying me across the entire S&P 500, and I don't really have to worry about it. I sort of let it sit there. I buy more every single month, and I let it grow until forever, until I need it. And over the last few years, I've seen pretty stable and consistent returns, even through some of the more wild rides we've seen in the stock market. So yes, in summary, ETFs are great and amazing and wonderful. So every beginning investor should start with that. The next question comes from Davis Dwan, who actually is a fellow finance YouTuber. He has great content as well. And he has a funny question actually. Do you invest in collectibles, such as sports cards or Pokemon cards? And the Pokemon card question is something that's very timely because the Pokemon investing fad has been on a rising trend over the last, 6 months to a year. And personally, I don't understand it too well because I think I missed the Pokemon train by 5 or 10 years, but I sort of get the appeal. And it seems really, really fun. So Davis, if you're investing in Pokemon cards or you know someone who understands the economics, I'd love to do an analytical breakdown with you, just so I can understand it for my own sake. So the next question comes from Matt, and he asked, how much money should I relatively safely need before considering to invest in my first real estate property? Also, what kinds of rental property types would be a good place to start? I have some general advice, but I'm not a real estate investor myself. All I have is my primary property. I used to do a rental when I was younger, but I no longer have that. But my advice to you, if this is like true rental income and true rental property, you actually only need 5% down to get a rental property. And that way you can free up more cash flow in the short term to renovate, to buy other properties, do other investments. But what you'll have to do is just run the numbers. If you can get enough cash flow every month from your renters that covers the mortgage, the maintenance, other costs, and you get a cash flowing property, then that's the right investment. But what you need to get started is probably 5% down, maybe upwards to 10 to 20% if you want a bit more. But you really want to hold on to the capital for other investment opportunities. And alternatively, if you want to get into real estate investing without a huge down payment, and this advice is for those of you wondering as well, is that you can invest into REITs or real estate investment trusts. And you can think about them like index funds, but for physical real estate. So you don't have to have 5% down on a $500,000 property. If you have $1,000, you can put that $1,000 and buy some REITs. I think that's how they're pronounced. And that money will grow roughly in line with how the real estate market grows, where those REITs are based. Personally, I have about $10,000 I put into fundrise.com a few years ago, which is a place you can buy REITs, and it's done decently well for me. And the next question is from Christy, and I'll link her channel below. And on her channel, her and her twin sister try a variety of things, mostly snacks from around the world lately. Oh, she has quite the question here, but I like this one. She says, Mark Cuban said diversification is for idiots, and Warren Buffett said he doesn't like diversification, and they would both rather invest in 3 great companies than 20 average ones because the best you will ever be is average. If you can't invest in the 3 that are great, why would you invest in number 4, 5, and 6 if they aren't as great? Do you agree with them? So this question depends on your ability to be an active investor versus a passive investor. If you're an active investor, yes, follow this advice. As an active investor, you're constantly following the stock market. You're constantly doing research on companies that you're interested in, looking at their fundamental analysis of their earnings report, their financials, and you're looking at the technical analysis of how their stock moves over time. And if you're willing to do this every single day, every single month, then yes, you should pick a couple of companies that you truly believe in and are willing to study over time and invest all your money into those. That's effectively how Warren Buffett has built his entire hedge fund, right? That's his whole job. But on the flip side, let's say you're not that type of investor and you're very lazy and you just want to put your money into this black box and see it grow, then you have to diversify. And you have to diversify into various index funds, such as the S&P 500 for massive diversification. But in my case, I'm also investing into ARK, actively traded funds. But for the very, very passive investor, diversification is key because what happens is that fund will adapt itself over time and rebalance the companies and its positions to make sure your returns are within the expected range. So let's say if you didn't take this advice and you were investing in the 90s, and let's say the top companies at the time were Blockbuster and Sears, right? And you put all your money in Blockbuster and Sears, but you didn't pay attention to what was happening to them. You didn't pay attention when they're going out of business. And eventually all your money's gone. You've lost all the value of that stock, and that's a bad, bad thing. But if you were able to see Blockbuster go downhill, you were able to see the rise of Netflix and move your money along with that sector. But then, yeah, actively investing in the top 3 companies that you know and believe in will get you much, much higher returns than the passive approach. So the next question comes from Michael, who's a great filmmaker and storyteller and has a channel about vegetarian food. And his question, which is actually not a question, more of a request, his request is, I would love to hear more about your investments and stocks to watch, because in the last video, I said, I put my money where my mouth is. So this is where I want everyone to be very careful of getting stock advice from their friends, their family, or even from me, because I'm gonna give you general advice because everyone is very different in terms of their risk tolerance and their strategy when it comes to investing. So I would only give specific stock tips to people who are willing to do the same amount of research that I am, because you have to keep up with this as much as I do. Otherwise, you have risk of losing your money. So for instance, I'm very bullish on Tesla because I've seen great returns, but there's no guarantee those returns will continue for how long and for how much. I'm very bullish on ARK Invest, and I gave you my reasons why in the last video, which I'll link up here. But again, you have to be very careful about taking specific individual stock tips because those stocks can be very, very volatile. So while I can't give you any specific stock tips right now, stay tuned to my videos over time and you'll get a sense of my investment strategy and where my brain is. The next question is from a fellow Minh, and he actually runs the Subtle Asian Influence Facebook group that I'm a part of, where I did ask some of these questions. And related to Michael's question, he asked, is it too late to jump on NIO? So for those of you who don't know, you can think about NIO as the Tesla of China, and they're relatively a new company over there, but also competing with Tesla in China. So Minh, my answer to you is, I don't think it's too late, but the question I have back to you is, what's your time frame and how long are you willing to wait? So my perspective, I fully believe that the EV industry or electric vehicle industry is in its infancy of where it's going to be in 3, 5, even 10 years. And while I believe that Tesla will take a majority of the market share, there's a high probability that there will be a second and third place in the world, in specific regions, and even in China. So while NIO did see very parabolic growth over the last year, I don't think we'll see that parabolic growth anytime soon. But personally, I bought 5 shares of NIO just last week. But like I said earlier, only invest in NIO if you're willing to follow their stock, follow their news, and do the research as much as I'm doing the research. So the next pair of questions comes from both Emerald and Sheldon. The question is, what exactly is a Bitcoin? what are my personal thoughts about it, and what would you say is a long-term strategy? So I don't claim to be a crypto expert by any means. I have exactly 0 Bitcoin, 0 crypto in my portfolio right now. However, I do plan on doing the research this year to get maybe 1, 2, maybe 3% of my portfolio into crypto, sort of to hedge my bets for the future. So for those of you who are completely new to crypto or to Bitcoin, it's a pretty complex topic. In a nutshell, it's positioned as a digital currency in the future. And maybe Davis, if you're watching, you can explain this better than I can. One of the downsides of crypto right now is that you can't really use it to buy anything right now. But a couple of the big banks and companies like PayPal and Square are starting to integrate crypto and Bitcoin into their systems, which means they're preparing for this like digital like evolution. The one really fascinating thing to me about cryptocurrency, specifically Bitcoin, is that there's a finite amount of Bitcoin to be mined that exists in the world. And that number is, I think, 21 million or so, which means that if you own one of 21 million of anything in like the future, and that thing has value, like that value of that Bitcoin is going to be like nuts. A lot of it is yet to be seen, to be proven out. But since I'm sort of in the middle, leaning more towards, yeah, I believe in it and it could be something really cool in the future, I'm going to try to invest a little bit of my money into it this year. Here's a second question from Maggie. And she says, stock prices have been rising like crazy. When do you think the bubble is going to burst? Maybe 2021? And no matter when you ask this question, how you ask this question, the answer actually is always maybe. We don't know. And personally, my portfolio has been through enough ups and downs over the years where I have a feeling there's gonna be a correction sometime soon, hopefully not a big crash because that would suck. But what's happening within the economy right now, what's happening within the US government right now, is sort of interesting. We just got a new president, which means there's certainty ahead of us, and the stock market loves certainty. There is sort of light at the end of the tunnel for COVID here in the US. The vaccines are out and people are getting immunized, which means there's more certainty in the stock market. So with that, hopefully stability does happen. And with stability and certainty, the stock market should steadily rise over the course of the year. But then again, crazy things happened in the last 12 months. So there are stocks that are overvalued. There are stocks that are due for an overcorrection. So we might see some of that dip. We might not. But my advice to you is if you're an investor, keep an eye out for that, keep investing. And if there is a dip, I would just buy more. So I have 2 more questions from Judy, and these are the final questions. And the first one is, do you do things that are supposed to be bad habits, like buying Starbucks regularly? Personally, I don't buy Starbucks that often. I usually just have enough gift cards. Starbucks is not one of my vices. But something that I've been bad about, maybe still bad about, is having a lot of subscription services. So I have Amazon Prime, Netflix, YouTube Premium, some more Google stuff for storage, Apple stuff for storage, Spotify, Disney Plus. I used to have Hulu, but I think I cut that off. I used to have Crunchyroll, but I haven't watched anime in a long time. I have various gaming subscription services through like probably my Xbox and my PlayStation. So yeah, I probably do spend a lot more on subscriptions than I need to. And my advice to all of you is definitely take a look and audit what subscriptions you have, because you might be surprised how much you're spending monthly on these things. And I saved this question for last because it's my absolute favorite question. How do you know if you have enough to retire? And that's a question that I've been thinking about for a long time. And I actually have done the math and have the spreadsheets that calculate this out in different models and scenarios for the next like 10 to 15 years. And the short answer to this question is if you're a millennial who wants to live like an upper middle class lifestyle, you'll need $2.5 to $3 million if you want to be financially independent and quote unquote retire. For that upper middle class millennial, I'm assuming you're going to have about $100,000 a year lifestyle to support you and your family in the future. But if you're planning to live like a much lower lifestyle, a much lower cost of lifestyle, let's say $50,000, then you'll only need half of that. So maybe like $1.2 to $1.5 million. And I'll explain the full nuance of this math in a future video, but I've done the math many, many times. So if you're interested, let me know down below and I'll walk you through my entire thought process, walk you through my spreadsheets, and hopefully you'll learn something. So that actually wraps up all the questions I had. Thank you for everyone who submitted a question. If you're watching this and this helped you out, please give me a like. It definitely helps this channel. And if you have a burning question about money or personal finances, anything, drop a comment down below and I'll do my best to answer them for you. And if you want to see more weekly videos on how to get wiser with your money, definitely consider subscribing. And as always, thanks for watching. I'll see you next time.